is good, my family? Welcome back to the channel. I'm so excited to be streaming tonight again. Let me go ahead and see those A's in the chat right away. Go ahead and throw those A's in the chat. Let me see what's up with you. Let's go. Let's go. What is up, Concepts? Good to see you there, buddy. I got you on HLH. What is it? HLTH. I got you, my bro. What is up, my family? Good to see everybody in here. Ah, man. Come on, guys. I want to know, did you take under any consideration what we spoke of yesterday, man? Did we talk about the targets to the downside on AMC, and did you take advantage of that information, yes or no? Let's go. What is up, team? Welcome back to the channel, man. Do me a favor, man. Hit that like button. Subscribe to the channel. Do everything necessary to get this thing to live long, thrive, and survive. I love it, man. I love it. Oh, sword. Yeah, I'm not kidding, buddy. He said I bought a sword. I bought a sword commander. My bro, I'm not joking. That is actually that's actually me. I'm a seasoned producer. Music multi-instrumentalist. I trade stock. I'm an influencer. I do the whole damn thing, bro. Everything good here, man. What is up, Ian Tucker? Matt, what is up, dude? Tahoe Joe. What's up, Susie? Good to see you in here. Yuka Frita, my bro. Good to see you in there. Chris Love, I see you. What's up, BIG? Oh, Jason Harden, guys. I you know what? I'm not going to be able to say hi to everybody. What's up, RJS? I see the Arca Bulls team coming in the Discord. I love it. Man, guys, listen. I don't ever want to tell you I don't ever want to say things like I told you so. Like nothing like that. Nothing like that. In fact, I kind of discredit that whole thing of stock traders where they say I called it and stuff like that. I get it. It's part of the game. I'm not gonna fault anyone, and that's okay. But I don't ever want to come across to you like that, right? Like I said, oh, I called it. No, guys. I actually didn't call it. The charts were already saying that to us. Remember, all I'm doing here is I'm going to the wall of hieroglyphs and I'm just reading them to you. Right? Whatever the chart says, I'm going to go ahead and read it to you. And you know what? If we get a couple words wrong here and there, then so be it. But so far, we're doing pretty good. Our strike rate, our batting average is nice. And we're going to continue on that analysis, right, you guys? But I'm very excited to be streaming with you here tonight. I know we came in a little bit late, right? We have a little guy over here with me, right? So I want to make sure that he's getting taken care of as well. What is up, June? Good to see you in the chat. Matt, what is up, buddy? Oh, man. I know, man. I feel that, but I just got to express to you, right? Make sure that you guys are being super, super careful in the financial markets right now, right? There is always something that can happen that's going to go right against us, right, man? But we were able to notice that we got the targets to the downside. We're going to go over them in just a sec here. But my buddy Concepts actually just gave me a very nice dono. He said, all I need is your opinion on that ticker symbol HLTH. So before we get into GME and AMC, let me give this a quick couple minutes right here and observe this for my buddy Concepts, right? Let's see what HLTH has on the price action, right? So very, very interesting reversal signal here. This type of candle does not speak of continuation to the upside, I gotta say, right? Sometimes when you experience full-on declines like that, that can tell you that the bears are still under control, right? So let's just go ahead and see if we got any shift to the upside on those volatility timeframes, right? Hourly time frame, we do have expansion. We still have a downside bias, though. Bi-hourly time frame still has that downside bias. The RSI is pointing up a little bit. We're going to find out why and where that resistance is, right? Where that resistance is. So we're looking at an overall very anxious ticker here, right? Look at the price action. It's tiny candles, and they're getting bigger and bigger and bigger. This is rising anxiety, right? It's just this is the way broadening wedges usually tend to behave, right? So with that thrust to the upside, that was the target met for today. The broadening wedge starts right about here, right? And that was the absolute topside target for the strategy. The pullback that you're getting is because of that resistance getting touched, right? For those of you who are new, just go ahead and wait just a couple minutes here. We're going to take a look at AMC and GME following HLTH, right? So make sure to stick around, hit that like button in the meantime, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive, right, team? Let's continue on the analysis here with HLTH and see what's up. Downside bias on that stochastic momentum indicator, 3-hour time frame. A little bit of consolidation on that RSI, showing us that it's still a little indecisive, right? Same thing with that 4-hour time frame. In fact, it doesn't have that full-on upside signal. Let's see. Okay, good stuff right here with that 6-hour upside, right? And the 8-hour time frame getting that upside as well with continuing expansion. Good stuff. That means that there could be another test to a local resistance in the following day. Not right away, though. So I do expect a continuation of consolidation and or slight downside in the immediate short-term time frame, which is going to tell you that right by, I would say, lunchtime tomorrow, by maybe around maybe even after mid-session tomorrow, this could get a slight tick up to the upside and get that's going to give you an opportunity to potentially get out of the market, right? So please be very careful how the price action is being observed here, okay? If you're new to the chat, just give me just a second here. You guys are going to take a look at AMC and GME in just a quick moment here. Concepts, buddy, I think I got to tell you, dude, to please be very, very aware of this, because I do think that you're not going to get up. You know what? Actually, now that the 12-hour time frame is giving us this gravitational pull towards the upside, I got to say that it may be closer to power hour. So if you get that power hour pump to the upside, it's probably going to land right there. All right. Now, if you do get the upside continuation, observe the larger candles in resistance, right? This one particularly here. So you could get a retrace back all the way up to that 9-cent zone, right? So when you do get there, consider taking that gain, right? Because this thing does not have a daily ATR of 30 cents. This thing has only 3 cents, brother. Very cool, man. So I appreciate you coming on by. Are you part of the Arca Bulls trading team, by the way? And if you are, in the morning, ask me, bro. All right? I want to make sure that I can look at this again for you. But team, now regarding AMC and GME. All right, Concepts, I love you, buddy. Make sure to come by the Arca Bulls trading team and ask me in the morning. I want to look at it for you, okay? Let's see what it has in the pre-market. It's a big time upside and a downside right there, right? 100% retraces are never good. All right, so anyway, what is going on with AMC, guys? We absolutely got this. We absolutely got the targets that we were talking about last night. Remember, I was telling you, do not average down on your position until you know where the floor is. We were talking about removing position during the downside. So if you know that the downside is coming, right? We were up here, right? We were up here talking about what? We closed at 444. We ended up reaching down to the $4 mark today. We marked off the areas of support and we knocked them out of the park, right? We got every single downside that we spoke of. And we also said that this could be the bear trap area, but that didn't happen. Guys, this is a shakeout here. There is a probable continuation to the upside. And I got to say, let me look at the daily. Hold on. It's getting critical here, okay? Guys, this is not a good thing, okay? So what we want to make sure that does not happen is that we get a daily closure like this candle here. Remember the inflection zone that we pointed at the 12-hour, right? The 12-hour time frame inflection zone is located right here. So let's make a line. We'll go ahead and color this one just something else completely different, right? Let's color it like this, neon green. So then let's go to the daily time frame and take a look at this, right? We're getting very close to that area. If the daily candle starts to close beneath that neon green, that's what I'm telling you, that shit's gonna start turning around, right? We're gonna start experiencing downside. So far, so good. We're not there yet, but I'm getting curious, okay? We got to get cautious here, all right? So remember, if we start getting a daily closure, that's a huge symptom, but it doesn't mean that it's over. When it's over is when you get one daily candle closing entirely below this area here without any touch to it, right? So imagine you got a candle like this, right? Let's just go ahead and draw one in here by, just for example, right? If this is your candle here, and, we'll make it bright red and all that good stuff, right? If this is your candle right here, we'll just move, we'll move it back here too. Imagine this is the next candle for the day. If we close a red candle like this below the 418 without any contact at that 418, that's considered a clean close beneath inflection. So if you get a clean close on price action, that means you're likely going to get a continuation to the downside. Guys, I'm elaborating very, 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 very cautiously here. I'm also trying to give you the the exact detail that I'm observing here because I know that there are millions and millions of market participants trading within AMC and GME. We're going to look at GME, by the way. Okay, but I want you to understand how price action works first to the inverse, right? To the bear side, so that you understand how the bulls react. We were talking about hopium targets yesterday. We didn't get them, right? The hopium was for us to resist or support back from this green line and then bounce to the upside. We didn't get that. We bounced to the upside from the following line. So if that's the case, that's telling us here that there could be the candle looks like a hammer, right? Those hammer candles at the bottom of a trend indicate reversal. It doesn't always happen though. What I like is that it's a 12-hour reversal candle. The higher the time frame, the bigger the strike rate. Okay, so if we have this as a hammer candle, there could be a V shape, sure. But what are the broader markets saying alongside this? Remember yesterday when we were observing the SPY, we noticed that there was correlation between the SPY, GME, and AMC. We noticed that the broader markets were guiding price for both of the assets as of yesterday or the prior day. So it is 100% important for us to identify the continuation of this formation or the continuation of price action from GME and AMC using the broader markets. So, guys, we weren't able to meet the absolute topside targets today, but we got the topside target that we spoke of anyway. 525.21 right here. We got it there. And we're still inside of this broadening wedge within the SPY, okay? If this is going to continue to the upside, I can't tell you, but we can observe the probabilities by taking a look at momentum, taking a look at volatility, and all that good stuff. So, what about GME, though? Did it have a good day? Some people were telling me that it moved up and it kind of disconnected, just like we spoke of, right? It disconnected from AMC. Now, there was a disconnect from AMC, but we already had speculated that potential. Now, GME does have a different strength. I'm going to give you guys one more piece of news and one more piece of information here that I don't know that you remember, and I think I have to remind you here because it's critical for the continuation of AMC. Now, what is that? I have to remind you about this. Do you remember when GME started running for the first time? When GME started running to the upside for the first time, AMC didn't react until it was above $26. So now that we're below $26, look what AMC is doing. Could we have found a threshold? Could we have identified a critical key price, right? Where AMC starts to react to GME's price movement. Could that be the case? There is a probability for it. All right. So now that we have to be detectives in this, right? We have to be imaginative. We have to use our imaginations to identify potential weaknesses and strengths. We have to identify confluence, things that rhyme, right? The higher probability things. The game it's a game of probabilities. We have to make sure to take probabilities very seriously here. So I will remind you again, price action on GME reaching $26 and above was at the threshold. That was the threshold, and that was the moment that AMC started to react. I was waiting for it. The moment that GME started moving up. Remember, we spoke of GME, what was it? April 14th, I think it was. April 14th, we were down here. This is where we spoke of. We noticed an anomaly on volatility by daily. Let me go ahead and take you there. Okay, let's go to April between this weekend here. This was the anomaly here. Look at the volatility read. You see how large this is? If you look back in history, this is the third largest volatility in contraction. This is the third largest read in its entire trading history. We measured it. So this was telling us that an explosive move was coming. So then Arca Bulls released a video that said $20 incoming. So from that moment, I started observing AMC. Why? Because I know that everybody talks about the correlation between AMC and GME. So I started observing it. I started keeping an eye on AMC. Where is it going to break? Where is it going to break? Where is it going to break? So I noticed that it started making an upside right when GME hit around $26. So when that $26 hits, I made a note. Why? Because I wanted to see if GME would decouple from AMC below $26, and guess what it did? It decoupled. So we have been correct the entire time. Things that guys, you got to look at things that people are not willing to look at, or people are not imaginative enough to look at it. Apologies with the word there, right? But yes, we are noticing here that we are below $26, and there's no correlation between AMC and GME. It took for us from April 14th at the low where we were saying we're going to drop into the $9-10 zone. This thing's going to go to $20. It took from that moment for us to see the movement of AMC, and now it just proved it correct. The fact of the matter is that we only have one iteration up and one iteration down. It's not enough information or data for us to make a true behavioral anomaly. We can't do that. But I can tell you right now that it kind of proved it okay. So, is it going to react? Will AMC react at $26? I can't tell you 100% that it is, but I can tell you that it happened already to the upside and to the downside. 2 out of 2 iterations now. 1 and 1. So, if we do get price action to reach that $26 target, it's going to be on AMC to get it's going to be on GME to get AMC to move. This is that information that I want you to be able to take under deep consideration. Let's identify, so since that's what it is, let's identify the continuation for GME. Let's go. 4-hour time frame, volatility versus momentum. Let's see what's up. Let's pull up stochastic momentum. And here's, guys, remember we were talking about, we were just talking about the deviation of the MACD that it was showing us that we had a potential upside in the 8-hour time frame, I believe it was, right? Yeah, check it out. We just talked about this last night. We said that there is inversion here. There is a bullish divergence. That we're getting declining volume here, declining price, but inclining histogram on MACD. We were identifying the potential bullish divergence last night. And that we got today. We got bullish price action. We did good. Right? So more information, more training here, right? More little trades, more little tricks to the trade that you can use on your own time to identify potential price movements up or down. All right, so we're doing good so far. I love it. We use the MACD. We don't usually use the MACD up in here in the ArcMastersCourse team, but what I can tell you is if the tool is able to be used, is that if it's appropriate to use at this time, then we're going to bring it up. We're going to go ahead and use it because now we're going to need that wrench, right? But if we're going to bring out that socket. But if you don't need the socket to pull out that big ass tractor wheel socket, then why would you bring the socket used on the tractor when you're only working on a Nissan Sentra, right? You bring out the tools that you need on the trade when they're appropriate, when they're called for. So that's what we did. We don't always use MACD, but we used it for this time around and we got the upside that we were looking for. Good deal. Now we get rid of it because it doesn't fucking matter anymore. Now we look at the next tool. What do we got in here? All right. So let's go to the 4-hour time frame. Like I said, we need to observe volatility and momentum. I'm liking that we're already getting a pivot towards the upside. That's telling me that the immediate short is pivoted upward. Here it is, right? 2-hour time frame. We just came back to the bi-hourly. We got an upside pivot. Nice. The hourly time frame may be curved down. There it is. It's curved down. Why is it curved down? The 15-minute and the 30-minute may be curved down even more aggressively, right? There it is. How can I tell that? Because time cascades. Because there's a domino effect. Time happens like that, team. When there is there's a counterpart to a reaction always, right? So this is wavelength. Okay, so when there's an upside, right, there's going to be a downside. It's a law of physics, man. Come on. So we got to use those things to our advantage. That means that immediate short-term time frame may be finding a floor soon. Do we have a floor on the 5-minute time frame? Not quite yet. It still has a little bit of downside to go. Where can we identify that floor? Well, I've given you guys this information before. When you have a parabolic upside, right? You have this, let me get rid of the moving averages and all that stuff. When you have an upside like this, and then you come back down and move away from that downside and never come back to it, that marks off an area of inflection right there. This zone here, 2185, means that we can come back and test it if we're still suggesting a continuation to the downside of momentum. That means that we may be able to come back down to the target of 2185, at least in the maybe Euro Open, maybe which is going to be 1 a.m. Pacific, 4 a.m. Eastern. We may be able to open up down here or come down and touch price action to that 2185. Do we have a secondary zone? We always have a secondary and a third and a fourth. There's always that. But relative to the 5-minute time frame would be around there. We have, let's see. Current time frame has about an 8-cent retrace on a 5-minute, right? So if we have 8 cents, this is only about 1 cent here, right? So let's measure the 8 cents. Could we really retrace back 8 cents from oh no, you know what? Actually, that's pretty good. Oh no, never mind. Sorry guys, that's 15, 20 cents. This is going to be your next support here, right here. Sorry, I was making the math wrong. I thought I was looking at cents for some reason. Come on, man. Who the fuck is not telling me? Arca, you're not looking at the right numbers. Here you go. All right, so yeah, we could retrace here to the 2204. If the 2204 fails, observe in here. I get the gap is there, right? But observe it in here. 2185 could be the bottom side. All right, so if we're able to make a move to the upside, let's validate supports first. Tomorrow, during the day, I need for you, if you're charting this, right? If you're charting this, I need you to mark off these areas. They're very important. The high of the day. Mark it off like that, right? Let's make sure that it's colored different so that you understand what your high of day is. Mark off your low of day. This is your low of day. This is your range that you need to combat in order for us to trade outside of. This is what I teach my master students. This is what I teach. This is how I train them. Okay? Mark off your prior day's high, your prior day's low, and your pre-market high and pre-market low. We don't have the pre-market yet because we're not there yet. So we're going to mark that off tomorrow morning. This is the range here. If we start to make price action, move towards the upside, and we start breaking above this 2273, there is a high probability that we're going to go up and test other ranges of resistance. What's the average true range on a daily? It looks like the daily average true range is $5.19 on a $20 asset that is massive. So that is absolutely telling us where we can go from here. All right. Now, if we open tomorrow, let's say that we open tomorrow at $22. Count it. 22 plus 5. That's where you're going. That's going to be around $27. Now, what does $27 mark? Well, it's very curious because it's confluent to this top side here, right? If we go up to that $27 mark, which is equivalent to $26.68, what did I say about the correlation between GME and AMC? And now you're catching the mathematics makes sense alongside GME. That's right. That AMC typically moves with GME once it breaks $26. And I'm telling you that there is a probability of hitting 26 tomorrow. If and only we open at $22. Okay, so $22, that, add the $5 into that and then you're good to go. But it depends on where we open. Okay, you guys make sure to observe where we open and close because you're not going to have the edge unless you're practicing some basic math here. All right. Yeah, sure. I mean, guys, see, the thing is that people think when you're buying puts, when you're longing puts on GME, people are thinking that you're going against the company. No, you're actually not. You're helping the company. And then they ask me, how is that, Arca? What do you mean? That's like you're shorting the company. No. If you're shorting the company, you're shorting the company. If you're longing puts, you're longing. You're not shorting. Because you long shares and you short shares. If you long puts, you're buying. You're making them richer, right? You're giving them money. So know the difference. When you're longing shares, you're going up. When you're shorting shares, you're going down. When you're longing puts, you're also betting the downside but giving them money for it. So there's a big difference between shorting and longing a put. It's not shorting, okay? You guys make sure to know that difference. Don't sound like an amateur when you're talking to somebody regarding your options contracts. You're not shorting if you're longing puts. But guess what? Say, for example, you want to bet that there's an upside. You can short the put. So if you short the put, that you're calling bullshit on the put. You're saying, no, that put is wrong. I'm going to short it. So you negate it, right? You say no because it's going to go up. So you short the put. But if you want to, if you're betting the downside, then you can short the call. Right? The short thesis works inside the short thesis works inside of the options too. But when you long a call, you're betting up. When you long a put, you're betting down. You short the put, you're betting up. You short the call, you're betting down. Just think about it. You're shorting a call. That means you're calling bullshit on the call. Okay? Know the differences. Don't sound like a beginner out there, okay, you guys? Make sure to remember that this is a pre-recorded thing. It's at around the 45-minute mark if you want to listen back when this is printed on the next day. Okay, you guys? Know the differences, know how the language is spoken, and you'll be able to move forward very nicely. All right, you guys? So let's continue on the analysis here, and let's find out if the upside is the higher probability here. We already identified the top end. This would be $26.67 or 68 cents if price actions opens at 22, observing that we have a $5.19 ATR, average true range. Now, if it goes to the downside, count them, right? $22 minus the $6, that puts you at your support. So you're getting a downside of around what? 17? You're getting a $17 retracement, maybe around there. So if that's it, does it rhyme with anything? Well, it does. Check this out. What are the odds that downside is the absolute opposite end of the trade? Now, I'm going to show you something very, very important now, okay? This is where I got to color this differently because I need you to focus here, okay? This is why we're getting consolidation right now, and not everybody is able to see this. Not everybody is able to notice or wonder why. Yes, we have data, right? We had GDP. PCE is coming up. 2 Fed speakers today. Guys, there's a massive amount of information and macro data that's going to leave traders a little pensive, okay? Here you go. Let me show you this now. When you get macro data releases, there is typically consolidation, which is what's happening now. But where does it consolidate? When you set the top side of a range and the bottom side of a range, we tend to consolidate at the 50% of the retrace of that range. Let's mark it off. Take a look at the price action right now. I'm going to make the line thicker for you, right? I'm going to make the center. That's why it tells you middle line, because it's a freaking real thing. We got to identify that. There is your 50%, right, of the range. And look where price action is. Look where we're hovering. That typically happens when we're within macro data releases. Don't be fearful. The fact is right now is that, yes, we have Fed speakers coming up. PCE data coming up. GDP came out today. Yesterday, the Arca Bulls and you listening in, we found out that there was a deep correlation between the SPY, GME, and AMC. Remember, we spoke about this already. So if there's a correlation to the broader markets, the SPY, the S&P 500, has everything to do with forward guidance. That means everything to do with jobless claims, right? Which I think we're going to get, or we just got. It's going to have to do with GDP, which we got today. The 2 Fed speakers, if the S&P 500 is reactive to those macro data releases and people speaking, and we're noticing correlation of GME and AMC, GME and AMC will also behave as such. There was an inversion today on GME, but why was there an inversion on GME? That's because we were at the bottom bound. I'm going to get rid of these green lines for you to identify what I'm looking at. We were at the 2 standard deviation bottom bound. We marched our way up to the other standard deviation, and now we're in the mean. Because that typically is how it works. This is called a mean reversion. That's what happens to price action normally. Okay, you guys? So we recovered where we needed to be. We're in the fair value, right? We need to understand now, If we need to see what the data is going to say, what is the Fed going to say, right? What are jobless claims going to do? What's the PCE number going to do? We need to know these numbers in order for us to identify the continuation. But we could see it maybe embedded in momentum and volatility. This is always the root and the foundation behind price action and its bias for direction. This is why I mention it all the time. So why don't we do that? Why don't we go ahead and now that we identified that we mean reverted, let's go and find out to see where direction is going to lead. Let's get volatility and momentum up, immediate short-term time frame downside. Why would there be a downside here? Well, the mean is right there. It's at freaking, I'm telling you guys, it's at 2173. We're at 2210. So price action would naturally come down. That's why you have a downside pivot on the 5-minute. Immediate short-term downside, right? Now, let's go to the 10-minute. 10-minute time frame has a shorter downside. That means that it has a longer period of time to realize a shorter end of, a longer period of time to realize a downside. So that means that it's going to naturally dive a little bit slower. If you go onto the 15, it's going to be even smaller, if not there at all. When you go to the 30, it's probably not there at all either. Okay, well, the 30-minute is a new, okay, so we're starting off a new trend. 5-minute to the 10-minute, 15-minute is not getting it just yet. So that means that if the 5-minute pushes enough to the downside and then recovers to the upside, it'll push onto the 10, then to the 15, and then to the 30. So what I'm observing here, team, by noticing that we have a downside, we have then this little bit of an upside here. We're curving towards a potential upside on the 30. That hourly doesn't have it yet. We still have a downside here. So we have an hour's worth of downside to go. Now, if we're able to observe the bottom side of an hourly range, what is the bottom side of an hourly range? That's going to tell you right here. We have 66 cents on average true range for the hourly time frame. So if we subtract the 66 cents, then we're going to be around what? We're going to be around the 2140, anywhere between 2140 and 2160 would be that range in there. So if we have 2140 and 2160, what is that looking like, right? So it's look at this. It's still around the mean. So if I mark off the 2140 right down here, say this, right here. Now look at the distance between this yellow line and the red line where we are. We're split in the middle. That means we're consolidating. Until that data is released, we're going to be able to tell where we're going to go. Since the S&P 500 is reactive towards those people speaking in the macro data, we also have to be reactive to that data as well. Right? Good stuff here. Good stuff here. I gotta have you guys see things outside of GME and AMC, because if we don't, we'll be trapped. Now, let's identify the continuation to the upside. Where's the buy hourly? Okay, look at that buy hourly time frame. Huge upside pivot. Now, why would it be pivoted towards the upside? Let's run something called confluence. We're using a mathematical indicator, stochastic momentum, right? Based around an exponential moving average 3 period and simple moving average of the 14 period, right? So if we're algorithmically setting ourselves through the bounds of an overbought and an oversold zone, 100% and 0% bottom and top, right? We're going to, naturally regress inside or deviate inside of this area here or oscillate. We have to see if we can pair this upside with maybe something psychological. What would the psychology be to meet the upside of this particular time frame in the buy hourly? Well, I can already show you. So you're getting this top side of the price action. You're getting the retracement here, and you're getting a bounce. What does that look like to you? That's called a bull flag. Dev Rider, what's up, man? Good to see you in here. So that's called a bull flag. We have now an area for an upside probability. So let's take a look at that. The measured move for your bull flag, measure it from the top end of the bull flag, right, all the way back to the lowest candle, which would be right about down here. Let's make it a solid line so everybody can see it, right? There you go. Now what you do is you apply this trend line to the top of that bull flag, just right up here. So that tells you that we would be reaching $23.59. So but we're on the bi-hourly time frame. How else can we validate that we're going there? Check this out. If we open up, like we said, at $22, the average true range on a bi-hourly time frame is $1.12. So what's 22, right? I guess 22.10 plus $1.12. That puts you at 23.22. Pretty fucking confluent to the 23.60 that we're looking at on that bull flag, right? So this is how we're able to manage which way we're going. We're able to manage if we're going up or down based on the time frame and the statistics of that time frame. So how can Arca tell that we're going to go up $100? When can we tell that we're going to go up $20? When can we tell that we're going to go up $10? Those are the questions that I get most often, right? But those conditions have to be really specific. We saw the conditions. Remember, on April 14th, from $10, $9.85, we spoke of those conditions, and we said there was a huge anomaly, the biggest contraction iteration historically, third biggest throughout the entire trading history of GME's history on that bi-daily time frame. That's how I was able to tell you that we were potentially going to see. That's going to be the equivalent. Let's see the bi-daily time frame ATR. So bi-daily time frame ATR is telling you that you have around $6. So what I was proposing was that from that low, we were going to get a jump of about 4, maybe bi-daily candles, three bi-daily candles to take us to the next resistance of $20. Because of the current iteration within contraction. Look at this amount of contraction we had. Usually when you have this big of compression or contraction, there is an explosive move to happen right after it. Now you're going to say, Arca, but that contraction already happened. In fact, we already made it all the way to the top. That's right. And so the explosive move happened. And we were right. And we were more than right. It went further and further, right? But you're going to say, Arca, so what does that mean? So we already made that move. It's already gone. It's not quite gone yet. And why can I say that? Because that's only one time frame. Look what's happening here on a 4-day. But what if I push to a 5-day? But what if I push to a bi-weekly? What's happening here and what's happening here? You see what I mean? By time cascading and it's a domino effect. That means that we haven't reached the point of the bi-weekly time frames upside yet. That means that the wave, the initial thrust, the initial impact, using physics, right? The initial impact that we got from April 14th was so great that it echoed or it continued revolving all the way up to the bi-weekly time frame. So the price action that you're getting right now with all this upside here is only propelling the bi-weekly further up. So that there is, I've got to tell you like this, there is a probability of still, I can't even believe I'm saying this myself because I'm not someone who plays for the squeezes, guys. I don't play for a fucking short squeeze. I don't do that. I'm not someone who diamond hands. I'm not someone who holds. So if you're here for that, I'm sorry, but I'm not that. I'm a short-term trader. I'm systematic. I'm algorithmic, right? And I'm short-term. But I am able to give you targets to the upside based on longer terms. Why can I do that? Because I've also been hired by companies. I've been a data analyst for other companies to analyze their stock and give them their upside probabilities day to day or downside probabilities. I've been hired to do that based on statistics. So if they have a downside, I don't give a shit. I'm going to tell them they have a downside. If they have an upside, I don't give a shit. I'm going to tell them they have an upside. And that's why you're here listening to me, because I don't have a bias and I will tell you the truth. Just like we did yesterday. I told you guys yesterday that we were likely to reach the targets all the way down to 406. Not a lot of people wanted to hear that shit, but it happened. I'm not trying to tell you that I know what's going to happen to a stock. I'm trying to tell you that I observe price action as a game of probabilities, and the probabilities were facing the fucking bears. And if the bears are taking action, then I'm going to give you bear action. It's 1 + 1 = fucking 2. If it doesn't equal that, I'm not going to tell you that. Yeah, I'm not going to tell you otherwise is what I'm trying to say. All right, you guys, it's simple. It's simple. That's the way it works. All right, so now GME, if we're identifying the bi-weekly time frame with a continuation to the upside and we're still getting upside price action, what's going to happen in the near term? Well, notice here that in 16 hours and 3 minutes, the bi-weekly candle's going to fucking close. That means that we're going to be able to tell whether this pivot is going to continue upward or downward. Now, what's going to tell us if it's going to shift to the downside on the bi-weekly? Well, if we go from green to red, remember, red candles open on top, green candles open on bottom. So this opened down here, right? And now we're moving up. We already made a critical downside all the way down there. We 50% retraced the prior body. That's normal. It happens at the open of every candle. It's all good. So we're about to open the new bi-weekly candle now. We're moving up. We're already talking about a bias for immediate short-term time frame downside before recovery. So that means that if we get recovery, that means that there's further upside. When does this candle close? By market close tomorrow. That means that if we want to maintain the upside pivot on a bi-weekly candle, that means that the upside has to happen tomorrow. And we already noticed that we do have support for an upside continuation. The upside continuation is not a huge upside. Why? Remember, we're deviating around, we're hovering around a mean right now. Why was that? Because it's correlated to the S&P. Why is it correlated to the S&P? Because there's great movement right now. We have the Fed speakers coming up. We have GDP. We have PCE. We have jobless claims. All of those factors are going to leave a question mark in the psychology of traders. So we don't like indecision. We don't like to not know where we're going. So if that's happening to the S&P 500 and we notice that there's a deeper and deeper correlation, mathematically we did it, right? We put the correlation coefficient against it. We notice that there's a deeper and deeper correlation day by day. So if there is, that means we have to assume GME is also pensive, which means in turn AMC is too. Why? Because it's a sympathy play. You can't tell me that you're talking about AMC moving with GME, and then you can't tell me that GME doesn't move with the S&P. Because yes, there's a sympathy to a sympathy. That's the way it works, team. That's the way it works. So tomorrow, if we get that closure with a positive green candle, ideally above, I'd say above $24, maybe $25, it'd be great. But remember, the next target for this thing to experience the next upside for AMC to react, remember the target. It's above $26. Right? Above $26, you're going to get some price action on AMC. Statistically speaking now, right? We only got 2 iterations, not mathematically proven yet, but we work with what we got, team, okay? I know that a lot of people were talking about the daily golden cross. That guys, it's a daily golden cross. For Christ's sake, it's not the biggest thing in the world. What I got to tell you is that usually when you get a golden cross, you got to come back and back test that support. So if you got it, that worries me actually. So if you got a golden cross, let's go ahead and point it out here, right? I got to give you guys some clarification here, because sometimes you're gonna hear influencers talk about the golden cross happened or blah 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 happened, and why the fuck is that? They're trying to fucking get a popularity shot on their channel or whatever. So if you're getting a bunch of influencers talking about the fucking golden cross, that's the moment you gotta worry. Why do you have to worry? Well, because when you get a crossover of that sort, price action tends to come back to validate the cross, right? And we're really far away from that. So that worries the shit out of me. But what we noticed historically yesterday when we were back testing the golden cross is that price action tends to come all the way back down near it. And then we continue, right? So don't take it as like it's the end, like we're good to go. Because in fact, the golden cross didn't just happen. That happened on Friday at the close of Thursday, right? And look what happened into the golden cross. We came even lower. right? So careful. When people talk about things like that, you got to wonder if they say, okay, there's a silver cross. First of all, what is a silver cross? Did you get it? And then also, where are we in comparison to that crossover? So if there is a distance from that cross, you got to say to yourself, shit, now I got to back test it to see if we retrace. So do we retrace? And then historically, you'll be able to notice that on the same time frame that it happens. Now, what does the golden cross even mean? Right? That's the crossing of a short moving average period over a longer moving average period. That means that your SMA 50, simple moving average 50 period on a closing basis, meaning that it takes 50 days of price action to close the next tick, right? It gives you the average on whatever time frame you're in. It is an equation, I'm sorry, but that's the simplest way of looking at it. A 50-day simple over a 200-day simple. The slower moving average crossing above, the faster one crossing above a slower one, that usually is bullish. The slower one crossing below, the slower one when it's above the faster one, that makes it bearish, right? So you don't want that. But yes, here's the thing. The more important signal is your SMA 200 on the daily. When you cross above your SMA 200 on a daily time frame, that generally speaks bull continuation. Sorry guys, I just got a little bit of my phone vibrated. Yeah, so it means bull continuation. So if we get a buy side continuation, that means that yeah, it's correlated now to being above the SMA 200 purple line, and we're on a bull market. Now, bull market, not speaking of the broader market, speaking of the underlying asset, right? In this case, GME. We're above the daily SMA 200. It's doing good. Okay, now let's take a look at another signal. Not a lot of people notice this. We got downside price action. Now, for those of you master students inside of YouTube, what is this called? Let me know in the chat if you know what this is called. I'm going to kick you in the ass if you don't know it. If you're a master student of mine, I will chase you and I'm going to call the cops on you. All right? Let's go ahead and type it in. Seb, I'm going to kick you in the ass. That's right. Ian Tucker noticed it. This is a sign of reversal. That's right. So what you're noticing here is that we have a potential buy formation breakout. Buy formation, why? Well, you have the hammer candle, right? At the bottom of a trend. Good. You also have the green body engulfing the prior red body. That is a bullish engulfing candle formation. So these structures, the candle structures matter too. So this is usually a sign of continuation. The next candle that prints here is going to give us validation for yet another day of continuation. If it prints green, how about that one? Right? That's going to be great news. Now, why would this be, how were we able to notice that we were going to get the upside yesterday? Right? First of all, I'm going to remind you, we got the MACD. We noticed the bullish divergence, histogram versus price action, right? Good stuff. Also, decline in volume. That was already showing that the bear thesis was weakening, right? Third thing, we had a tweezer bottom. So when you have two wicks confluent to each other, next to each other, especially on daily candles, that signals strength. That doesn't mean that it can't experience the downside. It just signals strength. Why we get the downside is because we have to test the downside. We have to test relevant supports in order for us to get a continuation to that upside. Right? That's why it happens, guys. So, now we got a bullish engulfing. There is a probability of a short-term downside. I said short-term, right? And we were already identifying those potential bottom targets. The bottom targets here, right? It would be your mean reversion. Where are we right now on the, let's see, the 12-hour time frame. Look at the 12-hour time frame reverting back to the mean, right? Now, will we have it again? Can I get somebody to give me the price for GME at the current moment? Do we have a 24-hour trading price at, around now? I would expect this to actually be hovering around 21 bucks. It's at 22.47. All right. Can we, Travis, are you able to tell if it went lower before the 22.47? Are you able to see the history of that price? Did we reach 21s at all? Like 21.35 to maybe 21.70-ish. If you can't, it's okay. I totally understand. But, you know, price action tends to do that. It reverts. Oh, it's not loading the graph. It's all good. It's all good. No problem. No. It's okay. It's okay. It's just, it really is to, Ian Tucker just gave us a low. There we go. Ian Tucker gave us a low of 21.47. I just told you guys that we could experience a low of around 21.35. Right? So that was your reversion here. We're hovering around the mean. We spoke of this downside just 10 minutes ago, 15 minutes ago, before I even knew that it was going to happen. And guess what? It's happening as we speak. Right? We got that bounce from the inversion. We're now bouncing to the upside. We're sitting at 22.47 right now, which is right above here. Right? And we were already speaking of the bounce from the downside to end up around here at 22.73. So it came up from 21.77, Seb says. 21.77? Are you joking? Look at that. Where's 21.77? We were talking about a 21.75 here. Right? So you can see that the thesis in the mathematics behind charting is working. Why does Arca know that? Why do I know that? Guys, because I'm an instructor. Reach out to me. Make sure to get into the ArcMastersCourse. I have a beginner's program for trading and charting. It's going to be a 5-week crash course. Get inside of that class immediately. If I don't see you there, I know you're not taking it seriously, or it's other reasons, right? I get it. I understand. Life happens. But I condensed it down to a 5-week program so that it makes sense with people with work. It's firing off 2 days a week, the same lecture. So it's going to be Saturdays at 9 a.m. PST and Mondays at 6:30 p.m. Pacific. 2 days of the same lecture so that I can make sure to get as many beginners as I can inside. Get your ass inside of that course immediately so we're able to look at how price action behaves. Yes, Flowrider asking me to check the monthly MACD. Let's go ahead and take a look at it, right? Now, monthly MACD, of course, it's kind of a larger time frame, right? We're going to have to consider how long it's going to take to get there. What is a MACD, right, guys? It's a moving average convergence divergence indicator. So that tells you, based on moving averages and a signal line paired with a histogram in the background, it tells you how much of an upside or downside we have to go. Now, if we're looking at this monthly time frame indicator here, I want to show you something because I see why you asked me to pull it up. That's good news. Okay. Notice here on the histogram that you're getting an upside, right? Notice the moving average is getting a downside. Now, what does that mean? Well, you're getting a bullish divergence. Just like we noticed yesterday from the 8-hour to today. We noticed yesterday we were getting exactly this. And we were able to say, hey, you know what? We're about to get a continuation to the upside, and we did. Magically. The crystal balls come up and people say Arca's a wizard, right? No, I'm not a wizard, you guys. I'm in Los Angeles, California, right? And I'm in a studio inside of my house, and I'm speaking to you from a headset, right? Into your ears. And I'm just a normal dude. My 4-year-old is actually running behind me right now. He's drinking some water and eating some Twizzlers. So I'm really just a normal dude. Okay, guys, so no crystal balls, no wizards, nothing like that, right? But we do have awesome tools that we can use to our advantage. Monthly time frame has a very, very tiny read here. This means that it's about to go from red to green. Now, when you go from red to green, you get things like this, right? Now, if you look at it against price action, then what the hell is that? Well, let's go ahead and revert back and see what that was. Because the last time we went from red to green, that thing happened here. And what is that with price action, right? Let's go ahead and pair it. Let's see what it is. Well, on price action here, it looks like it was the run from the $3 to the $500 target the last time it went to green. right? And this is about to hit green. So, guys, it's gonna take a while for this to happen, right? It has been, right? It's been red for years. Literally the 3 years that it's been hovering here, right? So, oh, CoinFox, my brother, saying if you're long Arca, send him a super chat and show your appreciation for all his hard work and join our Discord. My brother, I appreciate you so much, dude. CoinFox he's an admin. He like has, this guy can see everything in my life, you know? And he's always super chatting me. I can't tell you how much I love that guy, bro. I love you, buddy. Thank you for all your help. And Galactic Club saying, yo, Arca stepped away for a little, but did you check out SMFL? Sent a chat earlier. Dude, was that you that asked me yesterday? And I told you that it had a upside continuation, very likely. It's hovering, man. That move was critical. You know, it's hovering around the SMA 200 on a daily. We'll take a look at it later, though. But I want to make sure that everybody understands here. But yes, you know what? Remind me, okay? I want to look. Are you Galactic? Are you part of the Arca Bulls trading team? Because you look at CoinFox eating a Twizzler. So guys, options. Where are you at, brother? Good to see you, man, dude. I love you, buddy. Thank you so much, dude. Thank you so much. Bollinger Bands concepts is saying, please explain. Let's take a look. Why don't we pull up the Bollinger Bands here and see where they are in comparison to the price action on GME? Let's do it right now. And you know what? I'm going to pull up a standard Bollinger Bands for you to observe, because I do have a script of my own on that. But let's pull up the standard ones, and we're going to see how sometimes people can identify squeezes with it, right? So let's use Bollinger Bands regular, right? So, all right, so here it is. Bollinger Bands represent a mean reversion strategy, and it's a volatility indicator. Okay, now why volatility? Well, that's because the bands on the outside they expand or contract. They get tighter with price action, depending on how many transactions are coming in, depending on how many people are buying or shorting at a given time. Look at that run to $500. Look at how wide it got. Look at how wide the Bollinger Bands got. Right? So that means that there was a ridiculous amount of volatility. Now, notice how little volatility we expanded to reach almost 90% that move. Right? So that means that there could be a more explosive move later. It doesn't mean that it's going to happen right away. It just means that there could be a more explosive move later. And when are we going to be able to tell if we have expansion? Well, that's a good question. And it's a very interesting time to ask that question, because in 15 hours and 46 minutes, this monthly candle is going to close. What are the odds, right? And it's going to close above the mean. The mean here is $19.49. What are these bands, though? Why are they there? That tells you from the mean, which is 1949, how many standard deviations it's away. Usually, price action behaves 1 to 2 standard deviations day in and day out, week to week. Like here, 1 standard deviation down. A few weeks later, or months later, right? We have a one standard deviation upside on the monthly. But if you're looking at it on a daily time frame, that'll give you a different range, right? Here you go. So this is the way things kind of work, right? Bottom side, 2 standard deviations. Upper band, 2 standard deviations. Mean reversion, hover around the mean, right? And then 2 standard deviations down, 2 standard deviations up. It happens like this. That's usually how price action tends to move. 2 standard deviations up, 2 standard deviations down. That's your typical price action. This is observing volatility. So if volatility is contractive, right? It's contraction, meaning that there's not a lot of people buying or selling during a specific period. That means that the bands are going to close up just like this. They're going to tighten up. That means that there's high contraction. When we observe this through my algorithm, you'll notice that in these areas, it's very blue right there. See? That's contraction. So when you're in contraction, that means that there could be an explosive move, right? Now, if we go to the bi-daily time frame, notice here, right? Notice here inside the March into April area, how tight it was, right? Notice how tight it was in here. Then we go back to my algorithm and look at how big of a contraction phase we were in. That's when I told you, that's when me and CoinFox said, whoa, this shit's going to go to $20. We have a huge contraction phase, the third biggest one in its history. And we were right there. That's how we were able to tell that we were going to experience a big move. Now, yes, from the daily time frame, it has already exploded massively, right? We already got a huge run of volatility. But what happens though? What happens? Why did we retrace? That's because we did 3 standard deviations, 4 standard deviations. And guess what we had to do? That's right. We had to mean revert. Why did we mean revert? Because that's what we always do. Look, downside here, 2 standard deviations, right there to the upside to the mean. So then we go upside 2 standard deviations. Then look, we come back down to the mean. Look at this. 4 standard deviations. We're coming down where? To the mean. It doesn't mean that we're going to go all the way down. And it also doesn't mean that we're going to go all the way up. But since we had this bi-daily print as a huge green outside bar, that usually means continuation to the upside. And when you pair that with the mean bottom, that usually means 2 standard deviations up. Where's that target? It could be $30. It could be 32. It could be in this gap right here for the bi-daily, 34 to around 39. We're not going there immediately. Remember, we have to wait for the Fed. We have to wait for PCE. We have to wait for jobless claims. We have to wait for all those things that are pertinent to this week. I'm not sure what else we're going to get, into next week, but there is a probability we're going to look at some more data. Guys, I absolutely love to explain these things to you. I want to make sure that you take advantage of it, though. Reach out to me. There's a lot that I can teach you. There's a lot of things that I can teach you. Okay, but I want to make sure that we spend and dedicate the right amount of time into the stock trading, into the craft. Because the number one thing I'm going to teach you is what you don't want to hear. The number one thing I'm going to teach you is to stay the fuck away from looking at the stock market like a cash cow. That's not what we're doing here. We're going to learn the craft. And then guess what? We're going to learn the craft short first. So everything that everyone else has told you can go out the window with me. And we're going to do it the way my mentor taught me and the way that we continued our studies. And we have this awesome strike rate and we're growing. The Arca Bulls trading team is growing every day. Make sure, join me for the 5-week program. ArcMastersCourse at Gmail for beginners. And I'll speak to you if you want to further your education just like the other people. We are also offering the strategies mentorship right after that mentorship from the beginners. That's because I want to make sure that we can study the right way, guys. Okay, we have to really delegate a lot. We have to spend a lot of time into charting. Okay, a lot of time, and then we'll notice it like the back of our hands. It's okay. I love it. So, concept Sissy, those indicators on TradingView for TradingView is there for a reason? Yeah. Those indicators in TradingView are there for a reason. Learn each one at a time. Yeah. And honestly, guys, now that concept said that, I will tell you, yes, I am an algorithmic trader, right? I do use technology to my advantage, but your number one indicator, I will say this over and over, no matter what. Your number one indicator for stock trading is your price action. This is your leading indicator, your lagging indicator, your present indicator. It's your everything indicator. No matter how flashy someone else, like even me, no matter how flashy that your indicator is, your number one is price action. Oftentimes when I'm trading, I am not trading with many indicators or any at all. I use them for the analysis. I use them for the forward look and the back test. But oftentimes when I'm trading, I'm using my own price. And the only reason you're going to catch me drawing a line, it's for the team. But if I'm trading dead ass alone, you don't see a single line on the chart because I want to know. Guys, all I have to do is do this. Zoom out and look left. Where's the current price action? You're at 2261. your resistances that are pertinent right now. You have a very, very notable area at 2786. If you put a line across there, right? If you just do that, and then you just get rid of this, take a look at, and we're going to get rid of this yellow line here. Now, take a look at how much this rhymes. This yellow line that we put up here, you have a resistance here, resistance, 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 right? You have all kinds of rhyming price action within that area there. All that crap there, right here, all there. Why would I note that? Because that's an area where a high concentration was located. Lots of traders were resisting there for a very long time. So the more you test an area of support or a resistance, the more likely it's going to be used in the future. So this is why we backtest. This is why we look back, so that we can see how many times we touched those areas, how many times we hovered around it. Support, 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 resistance, 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 right? Resistance again, again, again. And we're about to hit it again. This is why I'm able to give you guys those targets, guys. It really is. It doesn't take a lot to see these things. And I want to show you how to do that. So reach out to me. Reach out to me. We'll go ahead and move forward. So, guys, Jason, my brother, look at that. He's giving me a very nice dono saying happy Thursday. I'm still on my free trial, and I have already learned so much from Arca options and the team. Just want to show my appreciation and let it be known that you all are awesome sauce. My bro, I appreciate you so much, dude. That really means a lot to me, man. And that's a nice donation, and I let you in for free because of that. I know you won the contest, right? You ended up winning, dude. I can't tell you how much I appreciate you, bro. Thank you, Jason. I really mean to teach as much as I can. Right? Let's see. It's the only stock that holding the stock market for now. Yeah, it is. It is, because Nvidia is falling off of a fucking cliff right now, right? That thing ended up getting the. It ended up falling pretty sharply. So did Microsoft. Hey, oh, guys, I have one for you. I do have one. If you guys want to play, I was gonna show this to the team in the after party, right? Because we usually, this is around the time where I close out the chat here live on YouTube, and we go back into the after party inside of the Discord with the other team. So, guys, I haven't even shared it one time with you today, right? Because join me in the Arca Bulls trading team. There's the link. I'm sorry, right? I'm sorry I haven't even shared it one time. So make sure to join me in the Arca Bulls trading team. There's the link that I just posted there. Make sure to subscribe with your PC or laptop, and then everything will be accessible on your phone, right? But usually, when we finish the stream on YouTube, we go to the after party, right? We go to the Discord with the trading team, and we continue observing things. We chit chat, and we also prep some plays for the next day. So this is one that I was going to show right afterward. But I feel that it's such a slam dunk that I think it actually has even further downside, guys. I spoke to the team about like 2 weeks ago. 2 weeks ago, maybe. I think 2 weeks ago, maybe 3. I don't know. I told the team that this was about to fall 30 fucking points to the downside, and I was like, dude, this is almost a slam dunk, like a short, right? And and everybody's like, oh man, that play is a lot of people have lost a lot of money on this. So far it has fallen 28 points today. Like it ended up at 28 points today, right? So I did my analysis on it, and I think it just started. I think the downside, low key, like legit, just started, even though it already dipped 30 points, right? So yeah, guys, I think that there's a further downside on this, and it's a huge ass downside. So let's just kind of leave it at that, right? But I guess I just wanted to show you a little peep into what we do inside of the Arca Bulls trading team after, right, in the after party. So make sure to join us. Make sure to join us, because then you have mics in there, right? You can always speak to me there in person too. A lot of people always raise their hands. They say, "Hey, Arca, can I talk to you?" Yeah, hell yeah, come on by. Open up the mic. Let me hear you, right? So so this is one, right? This is the next one. So guys, yeah, I just wanted to give you a quick little peep on that, and just to show you, right, that we do plan shit. We don't only, do ridiculous things and whatever, but we have to compose ourselves, because yes, there are ladies there, and there are also, you know, moms and dads, and I'm a dad, right? So we can't be too fucked up. All right, but everything is good. No. CPI, no. It's PCE tomorrow. PCE data tomorrow. So heads up on that. That's a price mover, man. That's a price mover. That's a market mover. All right, you're gonna move the sundial on that one, man. So you got to be careful. A lot of people tend to risk off until the data's out. Today we had 2 Fed speakers, and we also had what else did we have today? GDP. So yeah, there were good reads. CoinFox, buddy, saying join the after party and trade live with Arca tomorrow. Let's go, buddy. Thank you, dude. I love you so much, man. I owe you millions of dollars. So, dude. Yeah, guys. So, guys, I wanna just say thank you again for coming on by. I owe it all to you guys, right? The growth is happening. The Arcables team is really growing, and I couldn't be more thankful. So please consider coming on by. Consider helping the team grow and grow further and further. And, also make a change for yourself, too, as a trader. Let's be consistent. Let's be respectful, right? Let's make sure that we can have the mindset of a winner and really train ourselves to focus in on those things, because I know you could. We're all going through trials and tribulations. Shit, I am. You know what I mean? So let's make sure that we can all go through this together, because no one else is going to assist other than ourselves. So we have to be there for each other, all right, guys? Believe in yourself. Persist. Continue, right? One day your dreams and aspirations will come true. Even if we're older, even if we're younger, whatever it is. I love you guys, but let's go ahead and cut the chat here. I'll see you very soon. If any questions or concerns, reach out to me, but I love you, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very good rest of your night and or day, and I'll catch you at the Bell Mañana. Adios! Fuck yeah!